Yes, people, done with your break? Just say done. Okay, so first what you want to revise? You want to revise PGBP or you just want to revise first taxation of charitable religious trust? Trust, charitable. Sir, Super 30, this question we already did, na? So there is no use of this. So let's revise taxation of charitable and religious trust. Directly that check that topic. Now, taxation of charitable and religious trust. Can you tell me the page number? Page number in your compact? (161). So here on page number 161 there is a topic, taxation of charitable and religious trust. Hyderabad student, Bangalore, Coimbatore. Coimbatore is which state? Tamil Nadu only. Oh, Coimbatore is Coimbatore only, na? No second name. Like Chennai, we have Kovai. So in every city there is two names, na? Here, Vishakhapatnam has Vizag also, huh? Matlab in the Andhra, na? But that's in south only, na? In Kochi we have the Ernakulam also. Kozhikode is basically Calicut. So I always confuse between name. Okay, guys. Huh? Mumbai, we have Bombay. Bombay and Mumbai. Okay, but now we don't call Bombay. It's Mumbai. Earlier we used to call it Bombay. Like Madras and Chennai. Now you call Chennai, na? Not Madras. Okay. Yes, people, good morning to all of you. Good afternoon. Afternoon always like feel like sleepy, yeah. So always say good morning. Pongal, like afternoon is like if you had the pongal, then you feel sleepy, right? Pongal is your favorite food, na? Huh? Famous food is pongal. Pongal, they put lots of ghee in pongal, right? So, dry fruits also. I never seen the dry fruit in pongal, yaar. That is halwa or sira. You will call it sira or halwa. If you put dry fruits in pongal, then kaju rehta hai. Acha. Actually, what happens? Some North Indian people came here and they put the kaju in pongal, and now they say that this is pongal. No, that is like scripted. Okay. So pongal is sweet or like both. Very good, nice. Oh, good morning, people. Anna, please come fast. Where you all went? What you had today? Rice and sambar. Huh? Yes, people. So, welcome back after break. Now we are going to start with the charitable and religious trust. So we are going to revise one topic, charitable and religious trust. This topic will cover this time in examination 8 mark. So you will get the 8 mark question. 7 to 8 mark question you will get in your examination. Charitable and religious trust. Charitable and religious trust. Now charitable and religious trust. Religious, you understand, religious means any trust that if that trust is run any like temple or mosque or gurudwara or church, that trust is known as the religious trust. Like we have Tirupati Balaji Trust. See, Tirupati, I am a big fan of Tirupati Balaji. Basically, I follow Tirupati Balaji. So when I appeared for my CA final, then I pray that if I clear, then I will visit Tirupati Balaji. So after clearing exam, I visited Tirupati Balaji. First time I visited Tirupati Balaji. Tirupati Balaji is nearby Chennai, na? In morning there is a one bus, so just you have to catch that bus. In evening you will like come back to the Chennai, and they have the responsibility for darshan and all everything. Na, you also visit by that bus only? Huh? You visit by plane? No, I am not earning that much to I am not earning that much. This year I am going to claim the 87A rebate in new scheme. 115 BSc. Huh? 115 BSc, I will claim that rebate under section 87A. BP Virtual is paying reasonable tax, 22% only, under 115 BAA. Okay, so now we are going to start with the religious purpose. So religious means basically like if any trust is running the temple, church, gurudwara, that is called religious. Now what do you mean by the charitable? So charitable they have defined in section 2 clause number 15, and 2 clause number 15 is a definition of charitable trust. Okay, if any trust is doing this activity, then that trust will be treated as charitable. And in charitable, first point is a relief of poor. Say relief of poor. Means if any trust is giving the relief to poor people, then it will be treated as charitable. Now what do you mean by relief of poor? How you are giving the relief to poor? Is you are distributing liquor to poor people? Because you will give the relief them, na? Huh? Or you are distributing Wi-Fi password to everyone can use Wi-Fi, use Instagram and all. Is that is relief of poor? Then relief of poor means? Means nothing is given, then relief of poor means what is the basic necessity of poor people? Food, shelter and clothes. So if you are providing food, shelter and clothes, that will be treated as relief of poor. Or suppose if you are giving the benefit of education, yoga or medical relief to everyone. Now education is a charitable purpose. Yoga is also charitable. Medical relief is also a charitable. So if any trust is doing this activity, it is a charitable. Now next part is a preservation of environment, including the watershed, forest and wildlife. So there are various trusts, they are working towards the environment. So if any trust is for the preservation of environment, it is treated as charitable. Next is a preservation of monuments or places or objects of the artistic or historical interest. So suppose for an example, if any trust is working towards the preservation of the Taj Mahal and all, then that trust will be known as the charitable trust. So guys, here charitable means there are 6 points. One is the relief of poor, second is the education, third is a medical, fourth is a yoga, fifth is a preservation of environment, and last is a preservation of historical places and monuments. Now guys, there is a one last point that is related to the advancement of any other objective of general public utility. Now advancement of any other objective of general public utility, it means etc, etc. Many times if you write 5-6 point and after that you put na etc, etc. So this last point is basically a residual point, or you can say that etc, etc point. Now guys, this last point says that advancement of any other objective of general public utility. Means if trust is doing any other activity for the general public utility, that is also treated as a charitable. Now question is, sir, advancement of any other objective of general public utility means for general public utility, if you are doing anything for the advancement, it should be for general public utility. It is a charitable. Like suppose we started a coaching class. So coaching class, it is a general public utility. Answer is yes, advancement of any other objective of general public utility. But guys, after some time, lawmakers made one amendment. And now whatever I am going to discuss for the next 2 minutes, that is only for this point, not for any other point. Means whatever now I will discuss for next 2 minutes, that is only for advancement of any other objective of general public utility. Here they are saying that advancement of any other objective of general public utility is a charitable purpose. But it is treated as charitable purpose only if their business gross receipt should be within the 20% of the total gross receipt of the trust. Then only that trust will be treated as charitable trust. Otherwise, that trust is not a charitable trust. But this business receipt condition is only applicable for last point, that is advancement of any other objective of general public utility. If any trust is running the school, educational purpose or hospital and all, they can do the business as per their wish. No issue at all. There is no condition of business receipt and all. But guys, for the advancement of any other objective of general public utility, there is a condition that their business receipt should be within the 20% of the total receipt. then only that trust will be treated as charitable. Otherwise that trust is not a charitable. For an example guys, there is a one trust, their objective is advancement of any other objective of general public utility. Suppose their total receipt is 100 crore. And guys, in their business receipt in this year is 17 crore. So this is within the 20% limit. Answer is yes. So that year that trust is treated as charitable. Now suppose in next year what happened, their gross receipt is 100 crore. Out of that business receipt is 22 crore. Now it is not a charitable. Next year that trust is not a charitable. Again in next year, suppose their total gross receipt is 100 crore. In that 100 crore, 20 crore is business receipt. It is within the 20% limit. Answer is yes. So in that year it will be treated as charitable trust. You got my point or not? Alright, say yes or no. Now guys, next part is a section 11.1, and 11.1 there are various amendments in this section, and we will take approx 25 to 30 minutes to explain this section 11.1. Now guys, how income of the trust is going to be taxable? So always remember, whatever the income of the trust means whatever the gross receipt of the trust. Now suppose that gross receipt is 20 lakh rupees. So guys, out of this 20 lakh rupees, 15% is a standard deduction. Means 15% is your standard deduction, or you can set aside 15%. Now out of the remaining 85%, whatever amount applied for charitable and religious purpose in India, that will be reduced, and remaining will be treated as the income of the trust. I can take an example. Here guys, gross receipt of the trust is 20 lakh. Now 15% is a standard deduction, means in simple word I can say that 3 lakh is a standard deduction, and that 3 lakh is totally exempt under section 11.1. 3 lakh is exempt. Now remaining amount is your 17 lakh. Guys, out of this 17 lakh, suppose you're applied for charitable and religious purpose is a 10 lakh. So remaining 7 lakh will be treated as the income of the trust. This remaining 7 lakh will be treated as the income of the trust. So in case of trust, it's very simple. Just take the gross receipt, 15% is a standard deduction, that is totally exempted. Out of remaining 85%, whatever amount you applied for charitable or religious purpose in India, that is exempted. Remaining will be treated as taxable income of the trust. In this example, 7 lakh is treated as the income of the trust. Sir, you are saying that gross receipt of the trust means, gross receipt means, here I mentioned the gross receipt. So gross receipt means, in simple word, whatever the income of the trust, whatever income of the trust that you have to consider. But question is that, sir, is income will include donation also or not? Suppose if trust received the donation, so its donation is also part of this income of 20 lakh. Answer is yes. All donation will be part of this 20 lakh, but guys, there is a one exception, that is corpus donation. If any trust received the corpus donation, and that corpus donation means any donation which is received by any trust for the specific purpose, with a specific direction that that amount should be utilized for only that purpose, that is known as the corpus. So if any corpus donation is received by the trust, then that corpus donation will not be part of this gross receipt. That corpus donation is basically totally exempted. Corpus donation is basically going to be totally exempted. Corpus donation is totally exempt. But there is a one condition, that corpus donation should be deposited in 11.5 mode. Now 11.5 mode, now question is that what do you mean by sir 11.5 mode? 11.5 mode means there are certain safe mode is there. Means that corpus donation should be deposited in this safe mode. Now what is the meaning of safe mode? Safe mode means that amount should be deposited in the government saving certificate, or amount should be deposited in the unit of UTI, or central government, state government security, or debenture of any company which is guaranteed by the government, or units of the mutual fund, equity shares of the depository or stock certificate defined in the sovereign gold bond scheme 2015, or share of the NSDC, or share of the stock exchange, or subsidiary of the stock exchange. So in simple word, first point is related to the government security. Just remember by way of the government security as well as the mutual fund or UTI units. So UTI mutual fund unit they have purchased, or equity share of any depository. Depository means CDSL and NSDL. If they purchase the shares of CDSL and NSDL, that will be known as the safe investment. In second point, they mention if they have deposited with the post office saving bank, or deposited in the schedule bank or cooperative bank or industrial development bank. So guys, deposit should be with the either any bank or any like schedule bank or cooperative bank or industrial development bank. Remember here NBFC is not covered. So if any amount is deposited with the NBFC, then there will be a violation of the 11.5. If any amount is deposited in the NBFC, then there will be a violation, because here they covered only your bank, schedule bank, cooperative bank and industrial development bank. Now next is investment or deposit in any public sector company. Public sector company means government company. Government company example is like Indian Oil Corporation, BPCL, that is called public sector company. Air India, earlier Air India was the government company, but now Air India is not a government company. So suppose for an example, if any person invested in the government company, public sector company, but suppose public sector company ceased to be public sector company, then what will happen? So lawmaker says that suppose a public sector company ceased to public sector company, then investment in the share, then it will be treated as legitimate investment till the 3 years from the date of cessation, and in case of any other investment till the time of the maturity. So for an example, one trust purchased earlier shares of the Air India. Earlier Air India was government company, but now Air India is taken over by the Tata. So when it became the Tata then till 3 years from the date of when they became the Tata, 3 year your share will be treated as legitimate investment. So even if I purchase the shares of the Air India, then for the 3 years from the date on which Air India is converted into Tata, for 3 years my investment will be treated as legitimate investment. If I was invested in the shares of Air India, but suppose if I purchase the debenture of Air India and maturity date is after 10 years, and now they become the like Tata. So Air India to Tata and my debenture will mature after 10 years. Then don't worry, till the time of maturity, it will be treated as a legitimate investment. You got my point or not? Yes. Now next part. If investment in the bonds of approved financial corporation or public companies providing the long-term finance. So if any public company providing the long-term finance or any financial corporation that is approved by the government, then and you invest in that, then it will be treated as legitimate investment or investment in the immovable property. So these are certain safe mode of investment where if you invest, then it will be treated as the safe investment. So guys, here section 11.1 says that whatever income of the trust, out of that income 15% is a standard deduction. Out of remaining 85%, your amount applied for charitable or religious purpose in India, that remaining income is taxable for the trust. But question is that in gross receipt, is donation will be included or not? Answer is yes. Say yes. But there is a one exception, corpus donation. Corpus donation will not be part of gross receipt, but there is a one condition that corpus donation should be invested in the 11.5. So can I say that in case of the trust, basically 3 incomes are totally exempted. One is the corpus donation is totally exempted, but there is a condition if it is deposited in the modes prescribed in section 11.5. Second is a 15% of gross receipt is totally exempted, and third is a income applied for charitable or religious purpose in India. Out of remaining 85%, whatever income applied for charitable or religious purpose in India, that is totally exempted. Now guys, there is a one interesting case. Question is that what do you mean by applied? Applied means whatever the expenditure incurred for the purpose of trust, that is called applied. Applied means only revenue expenditure or capital expenditure also? Only revenue or capital? Right answer is both. So even revenue expenditure or capital expenditure, any expenditure if you incurred for the purpose of trust, that is called your applied. But that expenditure should be incurred in India only. Huh? Means because they mention that amount applied for charitable or religious purpose in India. So amount applied for the charitable or religious purpose in India, that is your totally exempted. Now question is that, guys, if one trust is giving donation to any other trust, is it will be covered in applied or not? If a trust giving donation to another trust, for an example, there is a trust, Tirupati Balaji Trust. Tirupati Balaji Trust is giving donation to the Siddhivinayak Trust. Is it will be treated as applied or not? Right answer is, if that donation is given as a corpus donation to other trust, then it will not be treated as application. If that donation is given as a corpus donation to any other trust, then it will not be treated as application. But guys, if it is given as a normal donation to any other trust, then it will be treated as applied. But there is a one amendment from this year. And that amendment is only 85% will be treated as applied. Only 85% will be treated as applied, and there will be a question in your examination this time. So I can take an example. For an example, Tirupati Balaji Trust donated 10 lakh to the Siddhivinayak Trust. And this is not a corpus donation. Then 10 lakh can be treated as applied. But guys, total 10 lakh will not be claimed as deduction. Only 8 lakh 50,000 will be allowed as deduction. Only 8 lakh 50,000 is going to be allowed as deduction. Now sir, where it is given? So if you check the compact, or I am showing you here, all people pay attention. Here I have given, pay attention. That is on the page number 163, I think. And here, point number 3. Any donation to any other trust registered under section 12AA or 12AB or institution under section 1023C, other than referred in explanation number 2, shall be treated as application for charitable or religious purpose only to the extent of 85% of such amount donated. Means whatever amount trust donated, out of that only 85% will be treated as application. Example, during the previous year 23-24, Balaji Trust donated 50 lakh to the Siddhivinayak Trust. Then guys, out of that 50 lakh, only 42.5 lakh will be treated as application. Only 42.5 lakh will be treated as application. Now next part, all people pay attention. Here, we are going to discuss certain explanation. Now first in explanation number 1, there are 2 points. First point says that, suppose guys, out of your income of 20 lakh, suppose some amount which is not received in the current year by trust. Miss trust follow accrual system. Trust included that income in the 20 lakh. But suppose trust has not received that income. For an example, suppose out of 20 lakh, 4 lakh rupees was one income which we have not received in the current year. But since trust follow accrual system, this trust follow accrual system, example, then guys, you can give one declaration to assessing officer in form number 9A, AO, at least 2 months before the due date of return filing, that sir, we have not received some amount in the current year, but we are promising you whenever we will receive that amount, we will actually applied that amount in the year of receipt or in the next year. Then in current year you can claim as deemed application. In current year you can claim as deemed application. Again I am repeating this point. This point says that, guys, suppose for any reason what happened, some part of income you have recorded in the current year, because you follow the accrual system and you recorded some income in current year, but that income has not received in current year. If you have not received that income in current year, then just give one declaration in form number 9A to the assessing officer at least 2 months before the due date of return filing. Sir, we will actually apply this amount in the year in which it is received or in the next year of that year. Means 1 year you will get the bonus. Then in current year, it will be treated as your deemed application. Current year, it will be treated as your deemed application. But when you have to actually apply that amount, you know that in the year in which it is received or in the next year. But suppose if you have not applied that amount in that next year, then guys, in the year in which you received the amount, next to that year, means obviously next year of that year, it will be treated as your income and it is going to be taxable under section 115 BBI at the rate 30%. At the rate 30%. So it is going to be taxable at the rate 30% in the year in which it is next year of the year in which it is received. So guys, try to understand. Now I am telling you with the example help of a year. For an example, in the current year, previous year 23-24, one trust has not received the 4 lakh. Then whatever the due date of return filing, at least 2 months before, this 2 months is an amendment. 2 months before the due date of return filing, they have to submit one declaration in form number 9A to the assessing officer and tell the assessing officer that, sir, this amount we will apply in the year in which it is received or in the next year. Suppose this amount is received in the previous year 27-28. What I told? What have I mentioned? 27. then this amount has to be applied in 27-28 or 28-29. Suppose if you have not applied, then it will be treated as your income in the previous year 28-29 under section 115 BBI at the rate 30%. You got my point or not? Yes. Now guys, there is a one more explanation. In the same explanation, there is a second part. Second part says that suppose due to any reason, XYZ can be reason, due to any reason, if you could not apply the 85% in current year, due to any reason, then just give one declaration to assessing officer at least 2 months before of the due date of return filing. Okay, sir, this amount we will apply it in the next year. Then in current year, it will be treated as deemed application. I can take an example. Suppose Tirupati Balaji Trust received 20 crore rupees donation on 30th March 2024. So on this 30th March 2024, suppose Tirupati Balaji Trust received the 20 crore. So is it possible for Tirupati Balaji Trust to spend that 20 crore within 2 days? Answer is no. So here Tirupati Balaji Trust can give one declaration in the form number 9A. Here also form number is 9A to the assessing officer at least 2 months before the due date of return filing, and Tirupati Balaji Trust will tell them that we will actually apply this amount in the next year. Then in current year you can claim as deemed application. In current year you can claim as deemed application, but guys, in the next year you have to actually apply that. In next year if you have not applied, then next year it will be treated as your income and it is going to be taxable under section 115 BBI at the rate 30%. At the rate 30%. You got my point or not? Yes or no? Okay. One more point. This explanation number 2 I already told you. Okay, if any amount is donated to any other trust registered under section 12AB or 12AA or institution under section 1023C shall be treated as application. But if this amount is donated as a corpus, then it is not treated as application. But if it is treated as application, then also it will be treated as application only up to 85%. There is a separate explanation. Now guys, explanation number 3 is very simple. This explanation says that whenever trust applied any amount, then section 40A3, 40A3A and 40 clause A subclause 1A of the PGBP topic will apply here also. Now what was the section 40A subsection 3, 40A subsection 3A and 40A subsection 1A? 40A subsection 3 is basically cash payment more than 10,000 not allowed. Means in a single day to a single person, if cash payment is made more than 10,000 by any mode other than account pay check, account pay demand draft or any mode of other electronic clearing system, then it will be disallowed. So here also it will be disallowed. So suppose trust paid salary to one of the trustee and that salary is suppose 80,000 per month and it is paid in the cash, then it is going to be disallowed. It is not treated as application. Second point says that section 40A subsection 3A. Now what is the section 40A 3A? Okay, suppose earlier trust already claim any application on the accrual basis and in current year they are making the payment through cash more than 10,000, then it will be treated as income of the current year. It will be treated as income of the current year. And section 40 clause A subclause 1A says that if any amount is paid to the resident person and TDS is not deducted or TDS deducted but not paid to government up to the due date of return filing, then 30% of your expenditure will be disallowed. So this section will apply here also in case of the trust. Now next explanation, and next explanation is very simple explanation. What this explanation says that, okay guys, suppose if any trust, oh bhaiya, why you are laughing? You are discussing about her? Nayantara? You both you were talking something. Anything? Huh? No, nothing. Nayantara is an actress from Chennai only, na? Famous actress, right? Famous, huh? Lady superstar. So I told actress only, na? Famous in the ladies superstar, there was a movie. Title is a ladies superstar. Okay, Rajnikant is a superstar and ladies superstar is a Nayantara. And what about Vijay? There are two Vijay. There are two Vijay. One is the Vijay and what that one more. One is the only Vijay. Huh? There is two Vijay, na, I think. Vijay Devarkonda, right? Huh? That is also Vijay, na? Kabir Singh, that Vijay name, that is Vijay Devarkonda, right? And second Vijay is only Vijay. Okay, second is a only Vijay. Okay, that is only Vijay, and that is Vijay with surname. Okay, so I'm talking. Okay. This is just a joke, don't worry. So you may talk about Vijay Nayantara. We don't have any issue. Your famous actress is Nayantara. Then who? You don't have any favorite actress? Actor? Rajnikant. Dhanush. Why this Kolavari D? No famous actress, actor? You had crush on any girl? What? You are mature enough here to understand that. You have any crush? No. Never. You install that Bumble or some like... There are, some like Tinder. Oh, Tinder. You are on Tinder? Married? So what? एक ही संभाला नहीं जा रहा. Tomorrow, like you have lecture of the Shubham Keswani sir. So what happened? Shubham Keswani sir, earlier he used to work with one company, Marico. So earlier he was in the job. He came to teaching 2 years ago when he came first time Mumbai. He is from Noida, Delhi. When he first time he came to Mumbai, that time what happened? He was just recording the lecture and all, and he started teaching little bit. His book was in market. That time he downloaded Bumble. Now what happened? He downloaded Bumble, and on the 2-3 days no swipe at all. After 2-3 days, he got first swipe from one girl, and girl asked that कि like in Hindi like उसने ये पूछा कि आप यहाँ, means we tell to anyone ना कि you are here, मतलब after shocking like कि you are here. Then Shubham sir reply कि I think you know me, can you tell me who are you? Then that girl reply कि actually if I tell you na कि who I am, then it will be very awkward for you. Then also our Shubham sir replied कि no, you can tell me, no issue at all. Then that girl replied कि yesterday only I purchased your book. So after that I asked him to like delete the application. So he has deleted. So when tomorrow there will be lecture of Shubham sir, if you are attending, then you can ask okay, you are here. Then who was on Bumble? Okay. So guys, now next part, all people pay attention. There is a very interesting concept. Suppose any trust is running the temple, church or Gurudwara or mosque. Means any trust is running the temple, Gurudwara, mosque or church. Can I say that religious trust? Are tell me yes. Now guys, if that trust is receiving any donation for the repair of the temple, mosque, Gurudwara or church, for repair and renovation, then that trust has an option. Either trust can consider that donation as a normal donation, or they can consider that donation as a corpus donation. Means trust has option. Means government has given the two option. If any trust is received any donation towards the repair or renovation of any temple, church, Gurudwara or mosque, then they have an option. Either they can treat that donation as a normal donation or a corpus donation. Now if they treat as a normal donation, then obviously first you will include 100% in the normal. After that you will reduce 15% standard deduction. Out of remaining amount you have to apply it for the purpose of trust, and remaining will be treated as your income. But if trust treat that donation as a corpus donation, then I can say that totally exempted. Corpus donation is totally exempted. Corpus donation is totally exempted. But guys, there are 4 conditions. First condition is they can treat it as a corpus donation, but there are 4 conditions. First condition is that amount should be utilized only for the repair and renovation of that temple, church, mosque or gurudwara. Means that should be utilized only for the repair and renovation. Second condition is it should be deposited in the safe investment under section 11(5). Third is it should not be donated to any other trust. And fourth condition is it should be separately identifiable. Means they should maintain the separate bank account for that particular donation and separately identifiable. If all the 4 conditions are satisfied, then trust can treat that donation as a corpus donation, and that is totally exempted. So in simple word here, if any trust running the temple, church, mosque or gurudwara, and if they received any donation towards the repair and renovation of the temple, church and all, then guys, they may treat that donation as a corpus donation. But if they treat the corpus donation, then there are 4 conditions. First is it should be utilized only for repair and renovation. It is separately identifiable, 11(5) invested, and it should not be donated to any other trust. If these conditions are violated, then it is going to be taxable in the year of the violation. If these conditions are violated, then it is going to be taxable in the year in which this condition are violated. You got my point or not? Tell me yes or no. Okay guys, now there is one more explanation, and this explanation is interesting. You have to remember here assessment year also. Okay, this amendment is applicable from which assessment year? So guys, there is one explanation number 4 that is added by Finance Act 2021, and this is applicable from assessment year 20 to 23. Guys, assessment year 20 to 23 means previous year. Very good. Previous year 21, 22. Assessment year 22, 23. Now there is one explanation. This explanation says that suppose trust withdraw any amount from corpus. What trust did? Trust withdraw any amount from corpus. If trust withdraw any amount from corpus, and suppose they spend for the trust purpose. They spent for the trust purpose. They applied for the trust purpose out of the corpus fund. Then in the current year, it will not be treated as application. It will be treated as application in the year in which it is again deposited back into the corpus. What I am saying that, try to understand. This explanation says that if any amount is applied in current year, means trust did the expenditure in current year for trust purpose out of the corpus fund, means they withdraw from the corpus fund and they applied in the current year, it will not be treated as application in current year. It will be treated as application in the year in which again it is deposited back into the corpus. I can take an example like during the 2022, suppose Tirupati Balaji temple was closed due to the COVID restriction. So Tirupati Balaji trust was not having any income. Now what happened? In Tirupati Balaji, there are suppose 1,000 of employee. They are working for trust. Now what happened? They don't have money to pay the salary. So what happened? From corpus fund, they withdraw some amount. So from corpus fund, they withdraw the amount, and from that amount, they paid the salary to the employee. Then salary to the employee means in current year it is an application, but in current year it will not be treated as application. It will be treated as application in the year in which it is again deposited back into the corpus. You got my point or not? Yes or no? But guys, there is one condition here. And condition is that, and that you have to remember. What I'm saying that if any amount is spent out of corpus, then in current year it will not be treated as application. It will be treated as application in the year in which it is deposited back. But there is a condition that it has to be deposited back within 5 years from the end of the financial year in which that amount is applied. This is the amendment. Amendment is it has to be deposited back into the corpus. Earlier there was no condition till last year, but from this year there is a condition it has to be deposited back into the corpus within the 5 years from the end of the financial year in which it is utilized for the trust purpose. So suppose the Tirupati Balaji trust used that amount in current year from corpus, then within 5 years from the end of this year it has to be deposited back into the corpus. Then in the year in which it is deposited deposited back, it will be treated as application. So guys, here try to understand explanation 4. I am reading this explanation. Try to understand. Amount applied out of corpus fund shall not be treated as application in current year. So it is not going to be treated as application in current year. However, when the income of any subsequent previous year is utilized to invest or deposited back into a specified mode under section 11.5 of such corpus, then such amount shall be allowed as application in the previous year in which it is invested or deposited back to the corpus. To the extent it is deposited back, it is treated as application only if the following conditions are satisfied. Now this condition they have like inserted from this year only. First is, application should be in India, means that amount was utilized out of corpus by the trust, but that application should be made in India only. Second is, application should not by way of donation to the corpus of another trust, means that amount apply should not be donation to any other trust, obviously logically. That section 40A3 and 40 clause A subclause 1A should be satisfied. Carry forward and set up of excess application not allowed. Application should not be for the benefit of the founder and all. And guys, invest or deposited bank, you just have to remember the last line, invest or deposited back into the corpus within the 5 year from the end of the financial year in which amount applied from the corpus. So this amount shall be deposited back within 5 years from the end of the financial year in which the amount applied from the corpus. Now here I took one example. Balaji Trust applied 50 lakh in previous year 23-24 for the religious purpose out of the corpus fund of the trust. Now in this case 50 lakh not treated as application in current year, but suppose in previous year 25-26 trust deposited back 35 lakh in the corpus fund out of the income of previous year 25-26, then 35 lakh treated as application for the previous year 25-26. You got my point or not? Are yes or no? Guys, there is a one more amendment. Not amendment. Basically, this also you have to remember. But in this also there is a one amendment of that 5 year. Try to understand. Guys, suppose trust spent some amount in current year out of the borrowed money. Say borrowed money, loan amount. So borrowed money or loan amount, if trust applied in current year, then in current year it will not be treated as application. Current year it will not be treated as application. It will be treated as application in the year in which that money is repaid to the bank or repaid to the any institution. So suppose for an example, in current year trust borrowed the money and they applied for trust purpose. In current year it is not treated as application. It will be treated as application in the year in which that money is repaid. That money or loan is repaid, only in that year it will be treated as application. But guys, here also they put one condition, that amount should be repaid within 5 years from the end of the financial year in which that amount is applied. So suppose in current year what happened, Tirupati Balaji Trust took the loan of the 50 crore rupees and they have constructed one temple, or they have utilized from borrowed money. In current year it is not treated as application. It will be treated as application only in the year in which that money is repaid to the bank. And guys, that repayment should be within 5 years from the end of the financial year in which that amount is applied out of the borrowed money. So this is one amendment. Here also you have to remember the 5 years point. Done. Now next part. This point already we have discussed. Now there is an explanation number 5. Explanation number 5 says that, sir, can trust there can be a loss or not? Answer is no. If there is a loss, it will not is going to be set up or carry forward in the next year. For an example, suppose for an example, trust income is 100. Out of that 15% is a standard deduction, so remaining is 85. Now suppose trust is spent 92 in the current year. So there will be a -7 in the current year. So question is that is minus or deficit, it can be set up and carry forward to the next year or not? Answer is no. It is not allowed to be set up or carry forward in the next year. It is not going to be allowed as a setup or carry forward in the next year. So this 7 has to be ignored. It is not allowed to be set up or carry forward in next year. Now guys, there is a one explanation that is added for whole section 11. And that also you have to remember. Guys, this explanation is added by Finance Act 22 and it is applicable from assessment year 22-23. Assessment year 22-23 means previous year. Previous year. Previous year. And guys, last explanation number 4, that is also applicable from previous year 21-22. So you can remember little bit. in trust topic, that major amendment was applicable from previous year 21-22. From previous year 21-22. Now guys, this explanation says that now trust can take the application only on payment basis. Now trust can claim the application only on payment basis. If any amount is outstanding, then it is not treated as application. I can take an example. Suppose today Tirupati Balaji Trust purchased the computer of the 50 lakh. Bill is received total 50 lakh. But suppose out of 50 lakh, only 30 lakh payment is made by a trust till 31st March and remaining payment is made in the April. Right answer is, in current year they can claim the application of only 30 lakh. Means application, income can be included on the accrual basis, but expenditure cannot be allowed on accrual basis. Now expenditure is allowed only on the payment basis. Now expenditure to the trust is only allowed on the payment basis. Means if you actually paid, then only it is allowed. Otherwise it is not allowed as deduction. Now your question may be like that. Okay, sir, you have mentioned about that two explanation, two option. Okay, suppose if any amount is not received, then it will be treated as deemed application. Or one more explanation you mentioned that, okay, sir, suppose due to any other reason, Miss Trust received the bumper donation in the current year, then trust can give the declaration. It will be applied in the next year. Sir, is that deemed application concept is still apply or not? Right answer is still, that is applicable. So guys, suppose for an example, in current year, Tirupati Balaji Trust received the donation. They could not apply till 31st March. They can give the declaration. If they have given the declaration to AO at least 2 months before the due date of return filing, then it is okay. Then it is okay. It will be treated as deemed application. You got my point or not? Alright, tell me yes or no. Now guys, next section is 11.2. Say 11.2. 11.2 says that if any trust could not apply the total income in current year, 85% not applied in current year, but they want to accumulate that income. They want to set aside that income. Then guys, there is an option of section 11.2. And if you did the practical life audit of the trust, then you must aware about there is a form number 10. There is a form number 10 in the practical life, and that is for accumulation. Suppose trust could not apply 85% in current year, then guys, there is a one option, and this option says that at least 2 months before the due date of return filing, trust can submit form number 10 to the assessing officer, but trust should satisfy the 4 conditions. First condition, they have to mention the specific purpose. For what purpose they are accumulating that amount. They should mention about a specific period also, but that period can be maximum 5 years. That period can be maximum 5 years. And that amount should not be donated to any other trust. That amount should not be donated to any other trust, and that amount should be invested in the 11.5 mode only. If all the conditions are satisfied, guys, then it will be treated as deemed application in current year. So 11.2 explanation says that, 11.2 section says that, suppose trust wants to accumulate any amount for a specific purpose, for a specific period, then they can fill the form number 10, and it has to be handed over to AO at least 2 months before the due date of return filing. Then guys, in current year, it will be treated as deemed application, but there are 4 conditions. A specific purpose should be mentioned, a specific period should be mentioned, and it can be maximum 5 years. Third is it should not be donated to any other trust, and fourth is it should be invested in the 11.5 safe mode only. If all the conditions are satisfied, it will be treated as deemed application in the current year. But guys, 11.3 says that about the violation. When it can be violation. First is, suppose that amount is not utilized for a specific purpose. It has been utilized for any other purpose. Then in the year in which it is utilized for other purpose, in that year it will be treated as income, and it is going to be taxable under section 115 BBI at the rate 30%. Second is, guys, suppose that amount is specified period. You have mentioned about the 5 year. And if that amount is not utilized for a specific purpose within 5 years, then in the 5th year, it is going to be treated as your income. Suppose if you like accumulated for the 4 year, and within the period of 4 year, if you have not utilized that amount, then it will be treated as your income of the 4th year. Guys, here there is no bonus year. Earlier, 2 year ago, there was an option of the 6th year. But guys, now there is no 6th year. If amount is accumulated for 5 year, then within the 5 year you have to utilize. If amount is accumulated for 4 year, within the 4 year you have to utilize. Otherwise, it will be treated as your income. You got my point or not? Yes. If that amount is donated to any other trust, then it will be treated as your income. And guys, if that amount is not invested in the 11.5, if there is a violation of 11.5, then it will be treated as your income. You got my point or not? Are tell me yes or no? Guys, one more point. There is a one section. That section is a 13.9. Say 13.9. 13.9 says that if you want to take the benefit of 11.2 na, then two conditions should be satisfied. One is you have to file your return on the time. Means up to the due date of return filing till 31st October, you have to file your return. And you have to give the declaration to assessing officer up to the due date of return filing. Means both conditions should be satisfied. Then only this exemption of 11.2 is applicable. Which both condition? First is you have to file the return up to the due date of return filing, and you have to give the declaration, that is form number 10, to the AO up to the due date of return filing. If both the conditions are satisfied, then only you can claim the exemption under section 11.2. Now there may be one doubt. Sir, here you are saying that declaration should be given up to the due date of return filing, and return should be filed up to the due date of return filing. But just in this section, it is mentioned 2 months before the due date of return filing. Then sir, what we have to check, that 2 months or up to the due date of return filing? Because there may be possibility na, like up to the due date of return filing, you have given the declaration, but not given before the 2 months. Then what will happen? I can take an example. Guys, just tell me, what is the due date of return filing of trust? 31st October. Now this section 11.2 says that form number 10 has to be submitted at least before 2 months before due date of return filing. So before 2 months will be 31st August. Huh? But guys, section 13.9 says that both things, means you have to file the return up to the due date of return filing, and you have to give declaration up to the due date of return filing. That both conditions should be fulfilled till the due date of return filing. So now there was one question of the people. Sir, this section says that up to the due date of return filing, 13.9, and in 11.2 you mentioned that before 2 months of due date of return filing. So which we have to follow? Then CBDT clarify, and CBDT given the benefit to the peoples. CBDT says that yes, in the law we made the amendment, at least 2 months before the due date of return filing, you should fill this form number 10, as well as that form number 9A in that explanation. But why we have given this 2 month time? So at the time of audit, when chartered accountant doing the audit of the trust, he may consider this form, because audit due date will be 30th September. Huh? But here CBDT says that don't worry, if you have not furnished this form before 2 months of due date of return filing, but at least before the due date of return filing, then also we will give you the exemption. So in simple word, I can say that 2 months there is no relevance at all. After this CBDT clarification, that 2 months there is no relevance, because CBDT says that here CBDT clarify in circular number 6/2023, they clarify that statement in form number 10 and 9A required to be furnished at least 2 months prior to the due date of ROI, so that it may be taken into account while auditing the books of account. However, the accumulation or deemed application shall not be denied to the trust as long as the statement of the accumulation or deemed application is furnished on or before the due date of furnishing of the return. So if examiner asks you any theoretical question, then obviously you have to write that 2 months before the due date of return filing. But even they have submitted till the due date of return filing, question is that is exemption is available? Answer is yes, exemption is available. You got my point or not? Tell me yes or no. 11.4.4a, that is related to business income, that is not more important. Now this registration part. Guys, in the registration part, nowadays, I think they will not ask you about the registration process, because that registration process they used to ask in the 2021, because there was an amendment from 1st April 2021. But don't worry, I will upload the revision lecture for this particular part. For trust topic, again, I will upload the revision lecture. But now I am not going to revise the procedure of registration. Directly, we will check the section. Directly, we will check the section 115 BBI. Say 115 BBI. 115 BBI says that certain income of the trust are going to be taxable at the rate 30%. One is if any income accumulated or set apart in excess of 15%. So normally trust is allowed a 15% standard deduction. If you are accumulating more than 15%, then that will be taxable at the rate 30%. Now guys, deemed application means that suppose amount is not received in current year and you have given one declaration, or suppose bumper donation is received in current year and you could not apply it in the current year and you have given the declaration, and if that amount is not actually applied, then in that year it will be treated as your income and it is going to be taxable at the rate 30%. Now next part, if any amount is applied for the benefit of the relative of the trust. Relative of the trust means if there is any like founder or author or trustee and all, and if you applied any amount for the purpose or benefit of the founder, author, trustee and all, then that is going to be taxable as per 30%. Now guys, if any amount is not deposited or invested in 11.5, if any amount is not deposited, now guys, all trust money should be deposited in 11.5. If any amount is not deposited or invested in the 11.5, then it is going to be treated as your income and it is taxable as per 30%. And income used for any purpose outside India, guys, trust has to be applied the amount in India only. If they applied any amount outside India, then it will be treated as the income. So for an example, one trust received the donation of 1 crore. Out of 1 crore, 20 lakh they applied in the Nepal. So that 20 lakh, whatever they applied in the Nepal, that income is directly going to be taxable at the rate 30%. Now guys, last point of this concept, anonymous donation. Tell me, what is the meaning of anonymous donation? Anonymous donation means Tirupati Balaji, that hundi donation. You know that there is a hundi in the Tirupati Balaji. So that is anonymous donation. When any person name is not disclosed, PAN number is not there, Aadhaar number is not there, that is called your anonymous donation. So guys, if anonymous donation is received by any religious trust, say religious trust. Religious trust means Tirupati Balaji. Then it will be treated as the normal donation only. And out of that anonymous donation, 15% is a standard deduction, remaining 85%. Out of that 85%, if anything is applied for the charitable religious purpose, it will be reduced, remaining will be taxable. Means it will be treated as normal donation. But guys, if any anonymous donation is received by the charitable trust, say charitable trust, then that anonymous donation will be taxable at the rate 30% under section 115 BBC. So this section 115 BBC is applicable only in case of the charitable trust. So if any anonymous donation is received by the charitable trust, then that anonymous donation is going to be taxable at the rate 30% under section 115 BBC. But guys, total anonymous donation is not taxable. First take the whatever the anonymous donation you have received, but out of that 5% of total donation or 1 lakh rupees, whichever is higher, that will be reduced and remaining amount will be taxable at the rate 30%. What I am saying, that try to understand. Okay, if any charitable trust, they received the anonymous donation. So first take the total anonymous donation received minus 5% of total donation or 1 lakh rupees, whichever is higher, that amount you have to reduce and remaining amount is going to be taxable at the rate 30%. But guys, whatever you reduce, this will be treated as your normal donation. Means whatever amount you have reduced here, that will be treated as your normal donation, and on that normal donation you can claim the 15% standard deduction and all, that all are allowed. Okay, now one more point. Guys, there is a one section 1023C, say 1023C. 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 Now in 1023C, there are three parts. First part is If there is any government hospital or government school, government educational institution, government colleges, government universities, guys, their income is totally exempt. In Tamil Nadu, you know that government schools are there, government hospitals are there. Their income is totally exempted. Whatever income they received now, there is totally exempted. Now, government school or government hospital means any school or hospital where government contribution is more than 50%. Means whatever their contribution in that, what in their total receipt, government grant is more than 50%. That is called your government hospital or government school or government educational institution. Guys, their income is totally exempted. There is no need of any registration. There is no need of any registration approval. There is nothing is required. Now next part. Guys, suppose if there is any small hospital, say small hospital, a small school, like there is a small hospital, a small educational institution, their income is also totally exempted if their main objective is for education or medical purpose, not for the profit purpose, and their gross receipt in the year is up to 5 crore. Their gross receipt is in the year is up to 5 crore, then their total income is exempted. So what I'm saying that there is a one section, this section number is 1023C, clause number 111AD or clause number 111AE. So here section 1023C, 111AD and 111AE, this says that if there is a small schools, a small hospital, and their gross receipt is only up to 5 crore, that gross receipt does not exceed 5 crore, then their income is totally exempted. They also not required any registration or approval. Only condition is that their objective should be for the medical or educational purpose, means wholly philanthropic purpose. They should not for the purpose of profit. Then their total income is exempted. There is no need of registration. But now question is that, sir, suppose there is a one institution, they are having the school also and hospital also. And from school, their gross receipt is a 4 crore. And from hospital, their gross receipt is a 4 crore. So total gross receipt is a 8 crore. They can claim the benefit of this exemption or not? Answer is no. Because here section 1023C, one note is given that if any person has the receipt from university educational institution as well as from hospital or medical institution, then exemption under this section shall not apply if aggregate receipt is more than 5 crore. If aggregate receipt is more than 5 crore, then exemption is not available. Like suppose if aggregate receipt is within 5 crore limit, then exemption is available. Otherwise, exemption is not available. Guys, in the second case also, there is no need of any approval or registration. In this case also, there is no need of any approval and registration. But condition is gross receipt should be within 5 crore limit, and guys, they should be for the philanthropic purpose, educational purpose or medical purpose, and gross receipt should be within 5 crore. Now there is a third clause. This third part says that suppose if any hospital or institution, educational institution and all, if they're not covered in the first part, they're not covered in the second part. Means first was related to government hospital, college, university. Second part was the small. If they're not covered in this two, then guys, they still can claim the 1023C exemption. But for that purpose, they should be registered or approved under section 1023C. Means they should take the approval under section 1023C. Clause number 4 or 5 or 6 or 6A, means they should take the approval from the CIT, PCIT, Commissioner of Income Tax or Principal of Commissioner of Income Tax. Then they are allowed the exemption. And guys, if they took the approval, then they can claim the exemption. But here exemption will be allowed similar to the 11-12. Means whatever we have discussed up for the religious charitable trust, then 15% will be standard deduction, remaining 85% applied and all that we have to do in the last case. But guys, in the first two case, government hospital and this small, their income is totally exempted. There is no need of 15%, 85% applied and all. But in the last part, there will be the 15%, 85% applied and all. Now there may be one doubt in your mind Okay, sir, suppose we have started one school that is not falling in first category as well as second category. Then we should go for the registration under 12AB because 12AB for charitable religious purpose and education is covered in the charitable also. Or we should take the approval under section 1023C. Guys, this both section are mutually exclusive. Means you have an option. Either you can go for the 12AB or you can go for the 1023C. Both law are same today. If that school or a hospital is going for 12AB, then also that 15%, 85%, everything. And if you applied for the 1023C, then also law is same. So you have an option. So normally in the practical life, we always tell to the hospital and all, you can go for the 12AB or 1023C, your choice. Your choice, and you can go with the like any one. But suppose if you take the approval here 1023C also and 12AB also, then guys, if commissioner come to know that if you approved at both places in the both section, then one section will be inoperative. There is a section 13.7 and 13.7 says that here your 1023C will be the inoperative and 12AB will be the inoperative. If you approved under 1023C, then your 12AB will be inoperative. But after that, you have an option. Okay, if you surrender it here 1023C, then 12AB again will be the operative. Now, don't go into that deep. Okay, now just check one question. That question number 2 of your RTP. Check question number 2 of your RTP. Question number 2, case scenario from your RTP. Just check question number 2 from your RTP. Just check the case scenario number 2. Case scenario number 2. Case scenario number 2 says that Seva Niketan, a charitable trust, registered under section 12AB. There is a one Seva Niketan trust. They already registered in 12AB. Runs an educational institution which is engaged solely for the educational purpose, and a hospital for the treatment of the person suffering from the mental disorder solely for the philanthropic purpose. The trust furnished the following information. Guys, I'm not going to solve this question for you. You just do that. You do. Try yourself. I'm going to give you 10 minutes time. And if you have any doubt, then I will tell you. Then tell me. Don't check the answer. Don't check the answer before. Don't check the answer. Just try to solve this question. Yes, people. How many of you completed? Only one. All other are just discussing with any other people. This question is not that easy. Obviously not that easy. So if you study, then also there may be possibility that your answer will not be right? So let's see. Should I discuss whole question or any specific point you want to discuss? Very good, beta. Very good. We have the 10 days batch, na? So today is the first day. So, okay. Don't worry. This time I will upload the revision lecture in English also if exam is postponed. Huh? If exam postponed, otherwise there are Hindi revision lecture is there. You don't understand Hindi at all. Like only number, obviously number you don't understand. But otherwise Hindi, you watch Hindi movie, na? Shah Rukh Khan movie. Subtitle. So in this lecture, subtitle is coming or not nowadays? Nowadays YouTube allows subtitle also, na? But that Hindi subtitle. Oh. So if I speak in Hindi, then English translator is not there. This time I will try to upload, surely. In April I will upload revision lecture for English also. This time I will upload. I will upload, obviously. Okay. ओ भाई क्या हुआ? तुमको डांस करना आता है बेटा? You dance apadi pode pode pode. Hey, there is a song from Chennai only, na? Apadi pode, ha. Huh? I like South Indian songs, South Indian actor. My favorite actor is that guy. You know that there is a one guy from the Andhra. That person, Sampurnish Babu. He throw banana and he can kill the person. You have seen that heart transplant surgery? Oh, he just throw the heart. He just first make the heart. And after that, he just throw. So directly in a hospital, it's automatically transplanted. And there are some light also after that. You have never seen that video? You have seen, na? He is my favorite actor. Oh, in regular batch I have mentioned. But he is my favorite actor. Sampurnish Babu, right? Yeah. So just focus here now. Case scenario number 2. Seva Niketan is one charitable trust registered under section 12AB, runs an educational institution wholly for educational purpose and also run the hospital for the treatment of persons suffering from the mental disorder solely for philanthropic purpose. The trust furnished the following information. Now first is the total receipt of the trust for 23-24 for educational institution is 3.10 crore and for hospital it is a 3.4 crore. Guys, just tell me here total receipt is cross 5 crore. If it was within 5 crore, then they can claim the exemption under section 1023C clause number 111 AD and 111 AE. If it was within 5 crore. Now, you may mention that, sir, you told us, sir, this trust is already registered under 12AB. So 12AB and 1023C, now just you told that 1023C and 10AB is mutually exclusive. But guys, that is the 1023C clause number 4 or clause number 5 or clause number 6 or clause number 6A. Only this section and 12AB is mutually exclusive. It means either you can claim the 1023C clause number 4, 5, 6, 6A. Means, and you know that in the 4, 5, 6, 6A, there is a registration or approval is required. Now, we have mentioned there are two cases. One is the government hospital and government school. Their registration is not required. And as well as the small educational institution and hospital registration is not required. And guys, here, if it is within the 5 crore limit, there is a small hospital or educational institution where registration is not required. You can claim under section 1023C, 111 AD or AE. Even you are registered under section 12AB. Then also you can claim the 1023C. But clause number 111 1 AD and AE, but you cannot claim the 1023C clause number 4, 5, 6 and 6A, because under this section registration is required and you can register either 12AB or 1023C clause number 4, 5, 6, 6A. So here guys, 1023C clause number 111 AD and 111 AE is not applicable since their gross receipt is more than 5 crore. So here guys, their total gross receipt here is 6.5 crore is a total gross receipt. Now next part. Voluntarily contribution, that is donation, included in one above, received for the previous year 23-24 from the public amounting to 105 lakh, and it include the corpus donation 55 lakh for the purchase of building for the trust, and guys anonymous donation is 20 lakh. So guys, they mention that trust total gross receipt is 6.5 crore. So 6.5 crore is total gross receipt. But guys, in this 6.5 crore, 1.05 crore is related to the donation. So what will be the remaining amount? 5.45 crore. Now guys, can I say that your voluntarily contribution, people call it donation. Voluntary contribution is donation only. That is 105 lakhs. But guys, out of 105 lakhs, where you like out of 105 lakh, can I say that how much is a corpus donation? 55 lakh is a corpus, and corpus donation is received for the purpose of building. A specific instruction is given that it should be for the purpose of building. So a specific instruction should be there in the corpus donation. After that, 20 lakh is your anonymous donation. So 20 lakhs is your anonymous donation. Anonymous donation. And after that guys, remaining will be your other donation. So what is the remaining amount? 30 lakh is your other donation. Other donation, remaining 30 lakh is other donation. Now next part. During the previous year 23-24, guys, computer purchase for 80 lakh. Now they have purchased the computer. Now they purchase the computer. They purchase the computer of 80 lakh. But guys, that 80 lakh computer they purchase out of the corpus fund mentioned in 2 above for the 30 lakh. Now guys, this 55 lakh was the corpus donation, and this was specifically like mentioned that it should be used for the purpose of building. But from that amount they purchased the computer. From that amount they purchased the computer. So guys, out of this corpus fund, 55 lakh was corpus fund, 30 lakh they have used for the purchase of the computer. There is a wrong utilization, or you can say that misutilization. So this 30 lakh is going to be taxable under section 115 BBI at the rate 30%. So what I am saying that here, like here they mention that in the current year they purchased the computer of 80 lakh, but out of this 80 lakh they used 30 lakh corpus fund, but that corpus fund was received for the purpose of building, and they are using for the wrong purpose, that is for computer purpose. So guys, here this 30 lakh will be treated as your income, and this 30 lakh is going to be taxable at the rate 30% under section 115 BBI. Now next part. Next part is they took the loan of 25 lakh. Guys, today only we have discussed that if you applied for the trust purpose out of the loan money, then in current year it will not be treated as your application. It will be treated as application only in the year in which that loan is repaid. Loan is repaid. And guys, out of the voluntarily contribution they used the 25 lakh. So your remaining voluntarily contribution was the 30 lakh. So out of this 30 lakh, 25 lakh they have utilized. So obviously this will be treated as the application. This will be treated as application or applied in the current year, that out of corpus they utilize, this is not treated as application, and they utilize for the wrong purpose also. So it is going to be treated as your income under section 115 BBI. Second, out of loan amount, it is also not treated as application in current year, but out of voluntarily contribution they utilize 25 lakh, that will be treated as the application in current year. Now next part. Now corpus donation received during the current year are invested in. So guys, you receive the corpus donation in current year is 55 lakh. But out of 55 lakh, 30 lakh you applied for the wrong cause. So it is taxable. Now what is the remaining amount? 25 lakh. Now guys, you can say that corpus donation is exempted, but condition is corpus donation should be invested in the 11.5 mode, safe investment. So out of 25 lakh, now where you have invested? So here you have invested in the post office saving account is 10 lakh, no issue. Canara Bank as a fixed deposit, there is no issue. But you invested in the non-banking financial corporation NBFC 10 lakh. It is not a safe investment. So I can say that it is not allowed. It is not allowed. Or I can say that it is not exempted. So 25 lakh, 10 lakh you have invested in post office saving bank account, it is okay. Canara Bank fixed deposit, that is okay as per 11.5. But guys, if it is not invested in the 11.5, so this 10 lakh is going to be taxable at the rate 30% under section 115 BBI. So there is a one section 115 BBI, and section 115 BBI says that it is going to be taxable at the rate 30% under section 115 BBI. Now next part. Next part. Deposited 15 lakhs towards the post office saving account, which are utilized for the purchase of building during the previous year 2021 or previous year 21-22 out of the corpus fund of the 10 lakh and 5 lakh respectively. Read this line again. Deposited in current year 15 lakh towards the post office saving account. By in the current year, you have deposited back into the corpus fund in the post office saving bank account, which were utilized for the purchase of building during the previous year 2021 or previous year 21-22 out of the corpus fund for the 10 lakh and 5 lakh respectively. Hey guys, I have mentioned if any amount is applied out of the corpus fund, then in the year in which it apply, it will not be treated as application. It will be treated as application in the year in which it is deposited back into the corpus, and it has to be deposited back within 5 years from the end of the financial year in which that amount was applied. Guys, now, and I mentioned that there are this amendment, explanation number 4 is added from assessment year 22-23. And assessment year 22-23 means previous year 21-22. So this amendment is applicable from previous year 21-22. Now what happened guys? In previous year 2021 and previous year 21-22, you have applied 10 lakh and 5 lakh out of the corpus, and you have deposited back into the corpus in the current year. So guys, for previous year 2021, this amendment is not applicable. So in previous year 2021, whatever you applied 10 lakh out of the corpus, in that year it was already claimed as application. In that year it was already claimed as application. But guys, this amendment is applicable from previous year 21-22. In 21-22, you applied 5 lakh out of the corpus fund. It was not claimed as application in the previous year 21-22. It will be treated as application in the year in which it is deposited back into the corpus. And here deposited back into the corpus in the current year, total 15 lakh. So guys, this 5 lakh will be treated as application in the current year. This 5 lakh will be treated as application in the current year. So 5 lakh is going to be treated as application in the current year. Now next part. Amount paid to another trust registered under section 12AB by way of donation of 10 lakh. But out of that amount, 2 lakh is given as corpus donation. So total donation given is 10 lakh. Out of that 2 lakh as a corpus donation is given. So 2 lakh will not be treated as application. Only 8 lakh will be treated as application. And amendment made by this year, guys, out of 8 lakh, only 85% is treated as your application. So 8 lakh multiplied by 85% comes to 6.8 lakh will be treated as current year application. Now next part. 6 lakh being the amount set apart in previous year 22-23 by the trust for charitable purpose under section 11(2), utilized in the current year for making the donation to the another charitable trust whose objective also education. Guys, if any amount is set apart under section 11(2) now, then there are 4 conditions. First condition, specific purpose should be mentioned. A specific period should be mentioned, and that period cannot be more than 5 year. And guys, that amount should not be donated to any other trust. If it is donated, then in the year of donation, there will be a violation and it will be treated as income. So here it is donated to any other trust. So guys, this 6 lakh is also treated as your income, and this 6 lakh is going to be taxable under section 115 BBI at the rate 30%. So 6 lakh is going to be taxable under section 115 BBI at the rate 30%. Now there are certain MCQs. Just check the MCQ, and if you have any doubt, then you can ask me. Just check all the MCQ till MCQ number 11. And if you have any doubt in any MCQ, then you can ask me. If you want to see here on the board some marking, then you can do that. Just do. Okay, I know that you will not check, so I will check. Okay, just pay attention. Seva Niketan wants to avail the exemption under section 1023C, clause number 111 AD or 111 AE in respect of educational institution or hospital for the previous year 23-24. Can it do so? Answer is no. Why they cannot do that? Because their income, this gross receipt is more than 5 crore. So which is the right answer? C. C in major question, C will be the right answer. Now next part, point number 2. What amount of corpus donation received by trust would not form part of the total income? Not form part of total income is how much corpus donation will be exempted. How much total corpus donation will be exempted? So guys, corpus donation, they receive the 55 lakh, but 30 lakh they have misutilized. So remaining is 25 lakh, and out of 25 lakh, 10 lakh they have deposited with the NBFC. So that will also be treated as your income. So can I say that 15 lakh will not be treated as their income? So here your right answer in the point number 8 is a C. So major question answer will be C. Now next part. What would be the amount of specified income taxable at the rate 30% under section 115 BBI? So guys, under section 115 BBI, one is this 30 lakh will be under section 115 BBI. Second is this 10 lakh under section 115 BBI. And last is this 6 lakh under section 115 BBI. So total will be 46 lakhs. So B is the right answer. Next part. What amount would be considered as application of the trust for the previous year 23-24? Excluding unconditional accumulation of 15%, assuming that it fulfill the related condition stipulated under section 12A. Now guys, how much will be treated as application? So current year application, one is your in your computer out of voluntarily contribution. So 25 lakh, just take the 25 lakh. After that, this 5 lakh, 30 lakh, and after that, this 6 lakh 80,000. So 36 lakh 80,000 will be the right answer. 36 lakh 80,000. Now next part. Seva Niketam claimed that anonymous donation received during financial year 23-24 are not liable to be taxed under section 115 BBC. Is the claim of trust is valid? If not, determine the tax leviable under section 115 BBC. Hey guys, Seva Niketan Trust received the anonymous donation of total 20 lakh. Huh? So out of 20 lakh, how much you will reduce? One is the 5% of total donation. So 5% of total donation, that is 105 multiplied by 5% comes to? Are Khajur 1 crore 5 lakh. Multiply by 5%. 5 point. So 5 lakh 25,000 or 1 lakh, whichever is higher. So higher comes to 5.25 lakh. So 20 lakh minus 5.25 lakh. 14 lakh 75,000. And now 14 lakh 75,000 will be taxable at the rate 30%. 4 lakh 40 42,500. So 4,42,500 plus obviously health and education cess. But here only 4,42,500 is given. So we will consider 4,42,500. But suppose if 4,42,500 is not given, you will add up the health and education cess also. And after that you will give the taxable tax liability. Chaliye. Question number 12 we already did. Now question number 13 from the RTP. This question says that a Blossom Tea Garden, a tea estate in the Dibrugarh, Assam. So here Blossom Tea Garden is there. A tea estate means your tea garden in Dibrugarh, Assam, received 23 lakh as a compensation from the insurance company for severe damage to the green leaves. Green leaves means tea leaves. Suppose there was a tea leaves, there was a severe damage to the tea leaves in the tea garden due to the hailstorm in July 2023. Blossom Tea Estate is of view that the entire receipt under the insurance policy for the damage caused by the hailstorm is tea leaf will be the agriculture income, hence would not be chargeable to tax. Examine the contention of the Blossom Tea Garden. That is one question. Now what happened, guys? That assessee is basically engaged in the manufacturing and growing and manufacturing of tea. You know that in our we have discussed about partly agriculture and partly business. In case of the growing and manufacturing of tea, there is a 40-60 ratio. Means 40% is treated as your business and 60% is agriculture. In case of coffee, there is a 25-75. If it is a grown and cure, but if it is a grown, roasted and grounded, then 75% 25. And in case of the coffee, only grown and cure, then 25-75. Grown, cure, roasted, grounded, then 40-60 na. And in case of rubber, 35-65. Like in intermediate, yaar, you did it. In case of tea, how much? For tea, but growing and manufacturing of tea. Growing and manufacturing of coffee, grown and cure, then 25-75. Grown, cure, roasted, grounded, then rubber 35 and guys, higher income will be always agriculture. Because in India, more population is doing the agriculture, na? So higher percentage is for agriculture. So whenever there is a 40-60, then 60% agriculture, 25-75, then 75% agriculture, 65-35, then 65% is agriculture. Okay? Higher percentage is always towards agriculture. But always remember, in case of tea also, suppose if you are engaged in the growing and manufacturing of tea, and suppose if you sold the green tea means green leaves, means you have not processed and all. Directly if you sold that green tea, then guys, everything will be your agriculture. Everything will be your agriculture. In case of coffee also, suppose if you are not processing anything, if you not process anything and directly you sold the coffee, then total income will be the agriculture. So here in this particular case, their green leaves are destroyed. And against green leaves, they received the compensation. So they have not manufactured the tea at all. So whatever compensation they received, that total compensation will be treated as agriculture income. Whatever compensation they received, that total compensation will be the agriculture income. So I think D will be the correct answer. Which is the correct answer? D. Okay. So D is the correct answer. D is the correct answer. Any doubt till now? No doubt. Now guys, let's start with question number 14. What question number 14 says? Question number 14 is your total income question, and this question give you the 14 marks. That's why this question is on 14 number also. In your examination, your always first question is of 14 marks, mandatory question, compulsory question. If you skip this question, then you have to appear in the next exam. Okay. But if you do this question and if you score more than 11 marks, 11 or more than 11 marks, then easily you can score the exemption. And don't leave this question for the last 10 minutes or 15 minutes. Always do this question on priority basis. But take care of your time also, because this is the time consuming question. 14 mark question, you can give maximum 30 minutes. You can, because every minute you have to count. Okay, 14 marks question, for 1 marks, you can spend the 2 minutes. For 30 marks of MCQ you are doing, just give 1 hour, not more than 1 hour. Within 1 hour, you have to do that MCQ all. Otherwise, just mark the C, 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 C. Okay. So within 1 hour, you have to do it. Otherwise, at the last 5 minutes, if any MCQ is remaining, then just you have to put the C, because most probably there may be answer will be the C. Okay. Now, guys, in this first question, don't skip this first question. And I have seen the various copies of the student. And if any student scored the 11 marks, 12 marks, 13 marks in this first question, they scored the more than 50 marks in the DT. They never failed in the DT. But if you skip first question, like you gone for that exam. So don't forget this question. Always do this question very carefully, and you have to write the notes also. Many times what happen, people are just adding less, add less, add less. They do add less. They don't write anything. They will get only 7 marks out of the 14 marks. But if you write notes also very nicely, you will get good marks. If you know the section number, just write the section number. If you don't know the section number, just skip it. But don't write wrong section number. Huh? Don't confuse the examiner. Suppose if you are confused between 48 and 45. Many people, suppose for an example, if you confuse between 48 and 45, what they will do, you know that. First, they will do write 45. After that, they will just do overwrite. Okay. And after that, say whatever you want to see, just you can see it. So, that examiner is very intelligent. Okay. Don't do that. So if you remember the 45 or 48, you write that. If you don't remember the section, it's okay. Just write as per income tax law. Just write as per income tax law. Okay. Now guys, we are going to start this question. Shubh Pregnancy Limited, established in 2015, engaged in manufacturing and selling of pharmaceutical product. Always remember, first question, that question will be from the company only. You will get the question of the company only. For individual and HUF, they used to ask question in the intermediate. In the CA final, you always get the question of the company only. There will be a company question. So assessee will be company. And 90% there is a probability that company will engage in the manufacturing business. 90% probability that company will be engaged in the manufacturing business. Here company is engaged in the manufacturing business. Now guys, when company is engaged in manufacturing business, then what are the additional benefit in PGBP? Only additional depreciation. But if company follow 115BAA or 115BAB, then additional depreciation is not applicable. Additional depreciation not applicable. Okay. Now next part. The net profit of company as per profit and loss account for the year ended 31st March 2024 is given as 900 lakh. This 900 lakh net profit is given after debiting and crediting the following item. So they have debited, credited the following item. So there are some items, there are some adjustment, total 8 adjustment are given, and they have debited, credited this item, and after debiting, crediting, their profit is a 900 lakh. So in simple word guys, you can remember that here they have prepared this P&L. Assume they have prepared this P&L as per accounts, and in this P&L, their net profit is 900 lakhs. Their net profit is 900 lakh. Now guys, in examination, We will start the question from the net profit. So first we will write the net profit is a 900 lakh. Now always remember that whatever adjustment given here, like in the debiting and crediting, like impact of this adjustment is already given in the P&L. But whatever given in the additional information, there is a one assumption, and that assumption is that whatever given in the additional information, this impact of this information is still not given in the P&L. This will be your assumption. Your assumption will be that whatever given in the additional information, adjustment of this item has not been made in the P&L. But if otherwise already, if it is mentioned clearly that it is already debited or credited to P&L, then you will assume that yes, it is debited or credited to P&L. Otherwise it is assumed that this additional information adjustment is still not made in the P&L. So in simple word guys, whatever given in the additional information, always assume that effect of this adjustment is still not there in the P&L. This is additional information. But suppose in additional information, it is clearly mentioned that it is already credited or debited to the P&L, then it is a credited or debited to the P&L. So here guys, one by one adjustment we will discuss. Point number 1. Payment of 50 lakh in the month of November 2023 to a foreign company for obtaining the know-how for the product launch in the month of December 2023. Guys, this adjustment every time ICI ask. Know-how is your intangible asset. And guys, you know that intangible asset, patent, copyright, trademark, franchise, design, formula, all are intangible asset. But one asset will not be treated as intangible asset. That is goodwill. Goodwill is not an intangible asset. And guys, this other asset are intangible asset. They are eligible for depreciation. And on intangible asset, your depreciation rate is 25%. Here you have debited to P&L account. So first you have to add back. Because 25% depreciation is allowed, but you directly debited that 50 lakh to P&L debit side. So you have to add back, because if you remove from debit side, then your profit will be increased, or you can say that disallowed 50 lakh. Now depreciation will be allowed. And on 50 lakh depreciation will be allowed. So 50 lakh multiplied by 25% comes to the 12 lakh 50,000. So 12 lakh 50,000. But guys, they have made the payment in the November, December. So it is on or after 5th October 2023. So only half rate of depreciation is allowed. And 25 multiplied by half rate is a 12.5%. So only 12.5% depreciation is allowed in the current year. So many times they here mention about the, like here they mention about the know-how. But in most of cases they will mention about the franchisee. Okay, you have taken the franchisee, and for franchisee fees, that much amount you have paid as a franchisee fees. Then guys, depreciation is allowed. It is a capital expenditure. Only depreciation is allowed. Now next part, all people pay attention. Next point says that electricity charges of 7 lakh for the month of March 2024 were unpaid up to the due date of return filing. Hey guys, electricity charges of 7 lakh for the month of March 2024 were unpaid up to the due date of return filing. You remember there is a one section 43B. In Hindi lecture I always say that Tangadati ek section, and in English we say Mukhe Nale Kande. There is a one section that is the Mukhe Nale Kande. It's on the Tamil only, na? Mukhe Nale Kande, right? I'm pronouncing right or not? Oh, what we call it? Mukhe Nale Kande. Okay, Mukhe Nale Kade, right? Okay, Mukhe Nale Kade. So guys, there is a one section 43B. Many people say, what is he saying? Mukhe Nale Kade. So there is a one section 43B. Say 43B. Hey, bhai, what they were discussing? What is it? Understand? Focus here. Okay, you can talk after 6 p.m. No issue. We will not stop you. Okay. So okay, tell me. Mukhe Nale Kade. There is a one section 43B. Say 43B. Now guys, 43B says that there are total 6 payment which will be allowed in current year only if actual payment is made up to the due date of return filing. Up to the due date of return filing. Otherwise, that expenditure will not be allowed in the current year. Means there are basically 6 payments which will be allowed in the current year only if the actual payment is made up to the due date of return filing in current year. Otherwise, it will not be allowed in current year. Otherwise, it will be allowed in the year in which actual payment is made. Now, which payment is covered? First is, if there is any taxes, duty or cess. Say taxes, duty or cess. Taxes, duty or cess, it means basically taxes, duty or cess, it means your indirect taxes like GST, custom, excise and all. It will be allowed in current year only if the actual amount is paid up to the due date of return filing. But guys, here taxes, duty or cess will not include the electricity bill. Is electricity, because what happened, there was one case law. In case law, what happened? One state government was providing the electricity. Now, one assessee not paid the electricity bill. So, when assessee not paid the electricity bill, assessing officer says that when you have not paid the electricity bill, and that section says that taxes, duty, cess or fees. So, he says that it will be treated as fees to the government and electricity bill not paid. So, section 43B will be attracted and it will be disallowed. But question is that it will be treated as fees or not? Answer is no. There is a one High Court judgment and High Court says that electricity bill will not be treated as taxes, duty, cess or fees. So electricity bill is allowed on the due basis even it is not paid up to the due date of return filing. So in our question, there is a point, and point is a 7 lakh electricity charges or bill is not paid up to the due date of return filing. Then also it is allowed as deduction. There is no need of any adjustment. There is no need of any adjustment. It is allowed as deduction. But guys, when we are discussing the section 43B, so let's complete the 43B first, because from 43B, this time there is a one question. In question number 1 only, there is a one adjustment in your paper, whatever paper will be for your May or June exam. In that exam, there is a one adjustment in the first question. And also there is a one MCQ also. Okay, either MCQ or there will be one adjustment in your exam, and that will be from the 43B. Because there is an amendment in 43B. So let's discuss with the 43B. Guys, so I have mentioned that first point is related to the section 43B. First point is related to the tax, duty or cess. Say tax, duty or cess. Tax, duty or cess. Second is if any bonus or commission to employee. Say bonus or commission to employee. Bonus or commission to employee. So if any bonus or commission to employee, then it is allowed as deduction only if it is actually paid up to the due date of return filing. Otherwise, it is not allowed as deduction. Now guys, third point is, if there is any employer contribution towards the statutory provident fund or recognized provident fund or approved gratuity fund or approved superannuation fund or new pension scheme fund or any fund as per the law. This is the third point. Now, fourth point says that, okay, guys, if you have taken the loan, if loan is taken from the scheduled bank, and scheduled bank include the cooperative bank or public financial institution or a state financial corporation or a state industrial investment corporation or NBFC, and if any interest of that person, like any interest to the PFI or a state financial corporation, state industrial investment corporation or scheduled bank or NBFC I have covered in the next point. Now guys, next is a leave encashment or leave salary. Now what is the meaning of leave salary? Leave salary means unutilized leave encash. For an example, any employee was having the 30 days of the unutilized leave. Suppose he received the money, that is called leave encashment. And guys, last point is any sum paid to the Indian Railway for use of the railway asset. This 6 amount is allowed in the current year only if it is actually paid up to the due date of return filing. Otherwise, this expenditure are not allowed in the current year. All people pay attention. 6 expenditure. Say 6 expenditure. Again, I am repeating. First is any taxes, duty, cess. Second is a bonus and commission to employee. Bonus and commission to. Third is a like employer contribution towards a statutory provident fund, recognized provident fund, approved gratuity fund, approved superannuation fund or any other fund as per the law or new pension scheme fund. Fourth point is if loan is taken from the scheduled bank or public financial institution or a state financial corporation or a state industrial investment corporation or NBFC. Next is related to your leave salary. And last point is if you are using the railway asset and if any payment towards the railway, then guys, it will be allowed in the current year only if it is actually paid up to the due date of return filing. Now guys, there is one amendment in this section. And this amendment is related to the SME, that is the Small Medium Enterprise Act 2006. And guys, on this amendment in the market, there is a huge confusion. And there is a confusion is legitimate. Now we will not go behind that confusion in the market. We are just discussing what examiner can ask you in the examination. Okay. Guys, this year, Nirmala Sitharaman ji included one point in the 43B clause number H. And Nirmala Sitharaman ji says that suppose you are making any payment to the small enterprise or micro enterprise, means micro or small enterprise, then you have to make the payment within time allowed under section 15 of the Micro, Small and Medium Enterprise Act. I will call it MSME Act again and again. So within the section 15 limit, time limit is given under section 15 of the MSME Act, then it will be allowed in the current year. Otherwise, it will be allowed in the year in which actual payment is made. So what this section says, try to understand. This section says that suppose if you purchase any goods or if you obtain any service from any micro enterprise or small enterprise, say micro enterprise or small enterprise, then you have to make the payment within time limit given under section 15 of the MSME Act. Then it will be allowed in the current year. Otherwise, it will be allowed in the year in which actual payment is made. Here, there is no limit of the due date of return filing, guys. Here, there is no limit of the due date of return filing. Here, this section is very clear. If you purchase any goods or services from the micro enterprise or small enterprise. One more point, guys. This section is applicable only if you are making payment to the micro or small enterprise, not to the medium enterprise. Here, medium enterprise is not covered. Under MSME Act, yes, there is a medium enterprise also, like micro, small and medium enterprise. But guys, under this amendment, only micro and small enterprise is covered. If you purchase the goods or services from micro enterprise or small enterprise, you have to make the payment to the micro or small enterprise within the time allowed under section 15 of the MSME Act. Then it will be allowed in the current year. Otherwise, it will be allowed in the year in which actual payment is made. Now guys, what do you mean by the micro or small enterprise? So guys, micro enterprise and small enterprise definition is given on your board. Focus here. For micro enterprise, they are saying that investment in the plant and machinery equipment should be within the 1 crore limit, means up to 1 crore. And turnover of micro enterprise should be up to 5 crore. And for the small enterprise, that investment in the plant and machinery should be up to 10 crore and turnover should be within the limit of the 50 crore. So you can remember 1, 5 and 10, 50. 1, 5 and 10, 50. So 1 crore is for plant and machinery investment and turnover should be within the 5 crore limit. So plant and machinery investment should be within the 1 crore limit and turnover should be within the 5 crore limit for the micro enterprise. And a small enterprise, it should be within the limit of the 10 crore and 50 crore. Now sir, again and again you are saying that if amount is paid within the time allowed under section 15 of MSME Act, then deduction is allowed in the current year. Otherwise deduction will be allowed in the year in which actual payment is made. Now question is that what is the time limit, sir? So guys, time limit is given under section 15 of the MSME Act, and time limit says that if there is a agreement between buyer and seller, what I am saying? If there is a agreement between buyer and seller, then whatever time given in the agreement, that time will be treated as the time as per the law. Means if there is a written agreement, not only oral, written agreement. If there is a written agreement between buyer and seller, then whatever time mentioned in that agreement, that will be treated as prescribed time. but that time cannot be more than 45 days. That time cannot be more than 45 days. If it is more than 45 days, then time we will consider as only 45 days. Now suppose, for an example, we used to purchase the books from the small enterprise or micro enterprise. And guys, we have the written agreement with that. Then we have to make the payment within the date written in that agreement. But suppose in agreement we have mentioned, suppose 30 days, then within 30 days we have to make the payment. But suppose in agreement we have mentioned the 60 days, then we will consider only 45 days. If within 45 days we made the payment, then it is legitimate payment within the time limit, expenditure allowed in the current year. Otherwise expenditure will be allowed in the year in which actual payment is made. Now next part. Suppose there is no written agreement between buyer and seller, then guys, time limit is a 15 days. Time limit is a 15 days, means from the date on which you accepted the goods or you purchased the goods, from that day within 15 days you have to make the payment. Then expenditure will be allowed in the current year. Otherwise expenditure will be allowed in the year in which actual payment is made. So again, I am sum up with this amendment, because in exam you will get 1 point. 101% in examination you are going to get 1 point from this section. Now what is this section? 43B 43B clause number H. This section says that if you purchase any goods from the micro enterprise or a small enterprise, then expenditure is allowed in the current year only if you made the actual payment up to due date given under section 15 of the MSME Act 2006. Now what is the time limit given in the MSME Act? Time limit is if there is a written agreement, then time given in the agreement, but it can be maximum 45 days. But suppose there is no agreement, then 15 days. If payment is made after this time limit, then expenditure will be allowed in the year in which actual payment is made. You got my point or not? Arey, tell me yes or no. Yes or no. Yes, na? You understood? So let's do one MCQ. Just focus to your board. Now, if you understood, then just do one MCQ. This MCQ is not from your syllabus. It is from intermediate. I'm expecting right answer from you. Let's answer. Okay? Only just consider one correction. Instead of buyer in that first bracket, it should be written as seller. Instead of buyer, it should be a seller. There is a one print mistake here. Yes, people. So your question is, how much deduction will be available? So how much deduction will be available? Nil, 5 lakh, 13 lakh or 12 lakh? Means answer is A, B or C or D. Now don't say on the random basis, okay? So how much deduction is allowed in current year? Okay, how many people says that no, nil, deduction is not allowed in current year? Any deduction not allowed? Raise your hand, like अच्छे से. Very good. There are some people, approx 20 people. This MCQ is from intermediate. How many people says that, sir, 5 lakh deduction is allowed? Oh, there are some people for 5 lakh also. How many people with 13 lakh? 13 lakh? Okay, so there are some people for 13 lakh also. And how many people says that 12 lakh will be allowed in the current year? 12 lakh allowed in the current year? So some people, you don't have any answer? You didn't? 13. Okay. Okay. So guys, there is a question. Let me try. I have also not tried still. Mr. Anil started a business of manufacturing of table in the Feb 2024. He followed mercantile system of account. So obviously on the accrual basis, he can claim the deduction. He purchased the wood from the A, B and C. The detail of the purchase and the payment is made. That is given. Now guys, from the seller, date of purchase, purchase amount and payment due as per the written agreement, if any, and date of payment. First point is, Mr. A is a micro enterprise and he purchased the goods on the 15 Feb 2024. Purchase amount is 5 lakh. As per agreement, it is mentioned that he has to make the payment within 30 days. So if he made the payment within 30 days, then expenditure will be allowed in the current year. Otherwise, it will be allowed in the year in which actual payment is made. Huh? Now, on 15 Feb, he has purchased. So from 16, you will calculate the days. So from 16, if you calculate the 30 days, can I say that 30 days is already expired? So this expenditure is not allowed as per section 43B. But this expenditure will be allowed in the year in which payment is made. But payment is made in the current year only, na? So it will be allowed in the current year. So obviously as per that section, it is disallowed. Means payment is not made within time limit. Then expenditure will be allowed in the year in which actual payment is made. So actual payment is made in the current year only, na? So it will be allowed in the current year only. So this 5 lakh you can claim in the current year. Now next part. Mr. B, a small enterprise, on 17 March you purchase the goods. 7 lakh, there is no written agreement. So within 15 days you have to make the payment. Now you made the payment on 5th April 2024. So guys, this expenditure will be allowed in the next year. This expenditure will be allowed in the next year. And last is a Mr. A medium enterprise. For medium enterprise, this section is not applicable at all. And if you follow the accrual system of account, so total 8 lakh will be allowed in the current year. So 5 lakh and 8 lakh, total 13 lakh will be allowed in the current year. So C is the right answer. So if you're not able to understand anything, then you have to write just C. Okay. So you have never noticed this point, C. You notice, na, normally it's C. Okay. Okay, guys, okay. Okay. Again, check here. All people pay attention. Now point number 2 of that question, RTP question. We are on the RTP question. And in the RTP question, there was one section. So directly we went through 43B total. Now, point number 3 in the RTP question. Loss of rupees 4 lakh due to the hedging contract against future price fluctuation in respect of import of raw material used in the course of the manufacturing. Hey guys, just remember one thing. And we will discuss the point number 5 also. First, I will read the point number 5 After that, I will give you some explanation on both the point. Point number 5. Loss of rupees 2 lakh from hedging contract entered into the mitigating the loss arising due to the fluctuation in the foreign currency payment towards an imported machinery purchased from the Japan for rupees 65 lakh, which was installed in the month of December 2023. Okay, guys. I'm just going to tell you some section, some reference of the section. Section number, there is a one section 43A. Say 43A. 43A says that if you purchase any asset from outside India, say outside India, on the foreign currency loan or from foreign supplier credit, then guys, if at the time of actual payment, if there is any foreign exchange fluctuation, gain or loss, it is not allowed in the P&L debit side, or it is not taxable in the P&L credit side. It will be adjusted with your actual cost. It will be adjusted with your block of asset. That is the section 43A. I can take one example. Okay, suppose for an example, suppose I purchase one machinery from outside India for the 50 lakh rupees. On the supplier credit. Now first I will include 50 lakh in my block of asset. After some time I made the payment, and at the time of payment, suppose there is a foreign exchange fluctuation, gain or loss, it will be adjusted with your block of asset. Now in this that section I have given one note also. Okay, suppose to mitigate the foreign currency loss, if you have taken any hedging contract and if there is any foreign exchange fluctuation, gain or loss on that hedging contract, that will also be adjusted with your block of asset. It is not allowed or taxable in the P&L side. So guys, first we will do the point number 5. Point number 5 says that loss of the 2 lakh from the hedging contract entered into for mitigation the loss arising due to the fluctuation in foreign currency payment towards an imported machinery. So here you are importing the asset from outside India, and that is purchased for the 65 lakh and it is installed in the December 2023. So guys, there is a loss or gain. Loss or gain. So it will be added to your block of asset. So here your actual cost of asset will be 67 lakh. How much? Are 60? So guys, 2 lakh first you have debited to P&L account. It is not allowed. We will add back the 2 lakh rupees and depreciation will be allowed on the 67 lakh. But this machinery is put to use for less than 180 days. So only half rate of depreciation, that is 7.5% is allowed. One more point guys, here 7.5% depreciation is allowed, but here this asset is used in the manufacturing business. So additional depreciation of 10% will be allowed in the current year. So on the 67 lakh, current year 10% additional depreciation is allowed and 10% will be allowed in the next year. Now question is that, sir, you are saying that foreign exchange fluctuation, gain or loss, this was related to machinery. Now question is that what about the other foreign exchange fluctuation, gain or loss? What about the other foreign exchange fluctuation, gain or loss? Guys, other foreign exchange fluctuation, gain or loss is allowed or disallowed. That for that purpose we have to check the ICDS. Now ICDS says that if there is any foreign exchange fluctuation, gain or loss related to the monetary item, then it is allowed. But if it is related to the non-monetary item, it will not be allowed. Means mark to market is not allowed on 31st March. It will be allowed only at the time of settlement. So monetary item related, like it is allowed in the current year or it is taxable in the current year. But if it is related to the non-monetary item, then it will not be, means mark to market is not allowed. If it is actually incurred the loss or gain, then it will be allowed in the current year. Now monetary item means any item for which value is fixed. That is called monetary item. So if you purchase like debtors, creditor in accounts in FR, you did that monetary, non-monetary item. So guys, monetary item, in case of monetary item, even if there is a like unrealized loss or gain as on 31st March, that is also allowed as deduction in case of monetary item. But in case of non-monetary item, mark to market loss or mark to market gain, now it is not taxable. Whenever there will be realized, only that time it will be allowed or taxable. Now point number 4 is clearly says that loss of 4 lakh in respect of hedging contract against the future price fluctuation in respect of import of raw material used in the course of manufacturing. Now guys, this 4 lakh is related to the hedging contract loss. Now it is related to raw material, and raw material is purchased from the creditor. So basically creditor is your monetary item. So even if this loss is not actually like, you know, that occurred, then also it will be allowed in the current year. Then also it will be allowed in the current year. So you can remember that. Just remember, if there is a foreign exchange fluctuation gain or loss related to the monetary item, allowed in the current year. Even on the 31st March, it is a mark to market, actually not incurred, then also it will be allowed in the current year. But if it is related to non-monetary item, then it will be allowed or taxable in the year in which it is actually settled. That is given in the compact. If you check the ICDS topic, you will get to know about this. Okay, now next part. Depreciation charged to the statement of profit and loss account. So you have debited the depreciation 45 lakh, just you have to add back, because 45 lakh, that is not allowed as deduction. It is as per your like Companies Act. So you have to add back. Guys, that 4 lakh earlier in the last adjustment, that 4 lakh loss is allowed. So allowed, so there is no need of any adjustment. Now next point, that is point number 5 is done. Now point number 6. Point number 6 says that rupees 20 lakh received from the Z Limited under an agreement in the form of the non-compete fees for not carrying out any business in the particular product. Hey guys, you know that what is the non-compete fees? Not compete fees means not to compete with someone. That is called non-compete fees. Your name? Sakshi. So suppose Sakshi is in our batch. Suppose Sakshi completed CA. And after CA, I used to ask to the people what you will do in future. So Sakshi, I asked to the Sakshi, what you will do after CA? After completing, she says that, sir, I am interested in teaching. So I will teach to the student. Then I ask, okay, you will teach to foundation student or intermediate student or college student? She replied, no, sir, I will teach to the CA final student. I again ask, which subject you will teach? You will teach audit, law, something? Well, no, I will teach DT. Now Sakshi is going to teach the DT for the CA final student. That time I afraid that, okay, yaar, our South India market may be captured by Sakshi. Sakshi says that, no, sir, I can speak in Hindi also. So I will capture North India also. Now that time I just told to the Sakshi, Sakshi, please don't do that, yaar. You can teach any other thing, na? Sakshi reply, sir, give me 20 lakh rupees. I will not teach anything. Now here I paid 20 lakh to the Sakshi. So this 20 lakh is known as the non-compete fees. Now this non-compete fees received by Sakshi, it is going to be taxable under the head PGBP. Where it is taxable? If you are not doing business or not doing any profession, and if you received anything, that is also taxable under the head PGBP. So it is taxable in hands of the Sakshi. But now question is that, is that 20 lakh will be allowed in hands of BB or not? Means, can I claim that 20 lakh non-compete fees in my P&L debit side, or it will be treated as capital expenditure or revenue expenditure? That is the question. Here this is not a question. Here this question is very simple. SSC received that non-compete fees, so it is taxable under the head PGBP. Since it is already credited, there is no need of any adjustment. But my question is, when you pay the non-compete fees, then it will be treated as your revenue expenditure or capital expenditure? Guys, on this point, there are two contradictory judgments of two High Court. One High Court says that when you are paying any non-compete fees to the Sakshi, it is not a revenue expenditure. It will be treated as intangible asset and you can claim the depreciation. That is the one judgment. Now there is another judgment given by the Gujarat High Court, and Gujarat High Court says that if any non-compete fees you are paying, guys, when I am paying anything to the Sakshi, is there is a generation of any asset or not? Is there is any asset generated or not? Answer is no. I just paid 20 lakh to the Sakshi. There is no asset at all. Means asset is not generated from this 20 lakh. So Gujarat High Court says that it will be treated as revenue expenditure and directly you can claim in the P&L debit side. Now in the examination, you have to follow the Gujarat High Court judgment, and Gujarat High Court judgment says that it will be allowed 100% deduction, revenue expenditure in the P&L debit side. You can claim as deduction as per the Gujarat High Court judgment. You got my point or not? Yes. That is given in the Super 30 first question, this adjustment. Now this adjustment is very clear. कि 20 lakh received from the Z Limited under the agreement in the form of non-compete fees, non-carrying out any business. So it is going to be taxable under the head PGBP. And since it is already credited to P&L account, there is no need of any adjustment. Now point number 7. Point number 7 says that, try to understand. Advance money forfeited. Advance money amount 20 lakh on proposed sale of the land forfeited due to non-receipt of balance amount of 70 lakh on time as per terms of agreement. The land was purchased during the previous year 1920. So guys, there was some negotiation, and due to negotiation, that negotiation did not materialize. You received the advance money. So guys, this advance money forfeited, if you remember the section 51 of the capital gain. In capital gain, we have discussed the 2 point, and you have to remember the date. That date was 1/4/2014. You can remember from that BJP government, 1/4/2014. So if any advance money forfeited before 1/4/2014, that has to be reduced from your cost of acquisition before indexation. But if any advance money is forfeited on or after 1/4/2014, it is going to be taxable under income from other sources in the year of the forfeiture. So here this advance money, if you forfeited 20 lakh rupees, it is going to be taxable under income from other sources since it is included in your P&L. So first you have to remove from here, means you have to reduce from here, and after that you have to include in the income from other sources. So under income from other sources, this 20 lakh will be taxable. Now next part. Excess on a sale of unlisted share of 15 lakh. Sold on 15 Feb 2024. So guys, unlisted share you have sold. So there will be a capital gain, and capital gain is taxable under the head capital gain head. It is not included in PGBP. So here it is already credited to P&L account. So first you will remove that 15 lakh, you will reduce, and after that you will calculate the capital gain under the capital gain head. Now how you will calculate that we will discuss from the additional information. Now what is given in additional information? Pay attention. Normal depreciation allowable as per Income Tax Act is 1961 is 35 lakh. So that is the normal depreciation as per Income Tax Act. So that is depreciation as per the section 32. So reduce will be, means you will reduce the 35 lakh depreciation as per section 32. Now depreciation, if any, required to be computed on amount debited or credited to the statement of profit and loss account is not included. So obviously there was one imported machinery of the 65 lakh. So on 67 lakh, whatever depreciation, additional depreciation, that you have to reduce because that is not considered in this 35 lakh. Now next part. The unlisted share. Ha bolo. Sorry. Which 2 lakh? No, anything is not adjusted. Entire 67 lakh, on 67 lakh, you by 2 lakh, you already debited to P&L account. So first we have to remove that. So you will add back. Total is 67 lakh. On 67 lakh, you will calculate 7.5% is normal depreciation and 10% is additional depreciation. Okay. And this 35 lakh also will be allowed in the current year on the other assets, your existing asset, you can say. Now guys, unlisted share acquired on 29 March 2021 is a 80 lakh. Hey guys, for the unlisted share, can you tell me what is the period of holding for unlisted share? Long term, short term? 2 years. So unlisted share acquired in the 29 March 2021 and it is sold on the 15th of Feb 2024. So there is a long term or short term. My question to all of you, what will be the sale price of the share? Can you tell me? What will be the full value of consideration? Full value of consideration 95 lakh. How you got 95 lakh? Because there they mentioned that excess on unlisted share. So excess on unlisted share is 15 lakh. That as per the company's law, obviously you never do the indexation and all. So 95 lakh will be your full value of consideration, and on the 80 lakh you will do the indexation. You will calculate your capital gain. Now next part. The total turnover of company for the previous year 21-22 is 282 lakh. So guys, turnover of that company, domestic company, 282 crores. So total turnover of that company for the previous year 21-22 was 282 crore, and the financial year 22-23 was 405 crore. Company has MAT credit of 20 lakh for the assessment at 16-17. The book profit computed as per the MAT is 15-20 lakhs. Compute the total income and tax liability computed in the most beneficial manner for the assessment year 24-25. So guys, here they mention about the most beneficial manner. So most beneficial manner means, first, you will calculate the normal total income and normal tax liability. How you will calculate the tax liability? Here tax rate will be 25% or 30%. 25, because 21-22 turnover is not more than 400 crore. So 25%. Now question is that when normal 25% tax rate you calculated, then MAT is also applicable. How you will calculate the MAT? Because book profit they have given. So book profit they have given is 1520 multiply by the 15%. Multiply by the 15% plus surcharge if applicable and all. You have to add and all. So after that you will get your book profit and MAT. So MAT and normal tax, whichever is higher, you have to pay. Now MAT credit is also available. So suppose if MAT credit adjustment is possible, you will do the MAT credit adjustment. Now guys, suppose if you are following 115BAA, because every company can follow the 115BAA. If 115BAA is follow, then your tax rate will be 22%, and 22% plus surcharge 10%. Health and education says 4%. So 25.168%. 25.168%. But guys, when you follow the 115BAA, then one benefit you have to surrender, that is additional depreciation. So additional depreciation of that 67 lakh multiplied by 10%, 6,70,000, that is not allowed as deduction. You got my point or not? Alright, tell me yes or no. Now guys, just check the solution of this question, and after that take the break of 15 minutes. That is your tea break.